What's going on, everybody? Welcome back to my YouTube channel. Now, let me show you a candle pattern that destroys more funded accounts than anything else. Now, it looks like a clean two candle deviation theory entry. It feels like one, but it's a trap designed to punish anyone who trades without structure. Now, watch closely. In this scenario, we technically do have a valid two candle deviation theory trade. The previous candle has closed bearish, and what we're anticipating now is price to create a top wick and then flip bearish. Now, this is the ideal scenario, but there's a few nuances that we have to take into consideration here when we look at this. The previous candle closed bearish, granted, which means the next candle should continue bearish according to the two candle deviation theory logic. But here's the part that most traders miss. We don't trade the candle deviation theory blind. We trade the candle deviation theory with structure. So if you look at the previous hour, what we have here is what we call butt bodies. You can see that the previous candle has closed at the same level as the previous candle. So however you want to call this, resistance, a failure to break the high, or as we call it, butt bodies, price is not broken above. It's close and it has attempted to push higher, failed, and then closed as butt bodies. However, there's a nuance here that we need to take into consideration. The previous and most recent structure has also closed here as butt bodies. Now, all four candles sit within the same tight structure. So we don't have just a scenario of one butt bodies, we have a scenario of two butt bodies. Now, what this means, when you see multiple butt body closes, it just simply means one thing. Price is compressing into a microstructure, not trending. So that simply means that there is no directional bias here on this 1H structure. Now, from a 1 minute perspective, we can clearly see all the signs that we need from a pattern perspective. We have the trend pushing to the upside. We can see price failing to break the highs. You can see price creating a deviation bearish in anticipation for this trend to now go bearish. You have a double top, which is a failure to continue higher. And now we have a previous candle that has closed bearish, anticipating the next candle to continue bearish. Everything just lines up perfectly. But here's the danger. Because these closes are so close together, the next hour has a high probability of reaching back up into the previous high first before making its real move. So what we have to contend with here is not the fact that we have a bearish close and we have butt bodies in anticipation of the next hourly candle to continue bearish, along with 1 minute structure that resembles a failure to break the high, a deviation bearish in anticipation of this new trend down. We have to contend with this microstructure that is compressing. So what that means for us in this scenario is that a straight immediate sell is low probability. The higher probability move is wait for the new candle to test higher first, fail, and then enter the trade. So the scenario that we want to see play out because of the butt bodies first, which is this high, is to see price attempt to push back into this high, completely fail, then create the deviation, and then enter at the flip. So from a 1 minute perspective, that would mean that price would need to come back into this previous high, completely fail off, shift to be in a bearish sentiment, invalidate, reset the structure so we're not entering at the bottom of a downtrend, and then look for the sells at this point. As you can see from this 1 minute structure, this is not what's happened yet. Anything that is to the left of this red line is this previous hourly candle, and anything to the right of this red line will be the new candle open. This is not the scenario that we're working with right now. So when you approach the market from a pattern perspective, you can expect to want to take everything, because the truth is a candle will close bullish or bearish every single day. But when you trade with a process, this gives you three things: structure, confluence, and confirmation, not hope. And this is how real operators use the candle deviation theory. What we do is we anticipate the continuation. Note the word anticipate, but we don't front run it blindly. So the process is this. We have here a very nice Audi candle close. We also have here a scenario where price is created but bodies. Now, the next step after the Audi candle close is to understand that within this structure, we have a cluster. A cluster simply means two but bodies within the same vicinity and no clear directional bias, meaning that we cannot clearly identify where the next candle is going, because right now there is no trend on that higher time frame. So we have to tread with caution. The next thing we need to do is we need to anticipate or expect price to retest the higher microstructure. So from an Audi perspective, what we need to see this new Audi candle do is first attempt higher into the but bodies, then fail. From a 1 minute perspective, we need price to attempt to come into the but bodies and fail. Once we have that information and we see the failure, then we can look to sell this market. So if we take a look at the 1 minute structure over here, what happens? Well, if you'd entered this trade immediately without understanding that process, you would have been triggered into the trade. Price would have gone in your direction, and that would have been super exciting. But as you can see, after price went in your direction, what happens next? You get stopped out. Now, this is not the scenario that we want to be a part of. If we just waited for exactly what we know we should have waited for, then we could have allowed price to come back into the but bodies, as it does eventually. There we have it. Okay. And now we have price come back in, as we've said we need it to. Now we're looking for price to completely fail, which is this. Create the downtrend, invalidate, reset, and then anticipate the downtrend once price flips bearish. What happens next? Price continues higher. So the lesson here is not only what I've just talked to you about in terms of the process of thinking through these scenarios, but also that as important as it is for you to get into these trades and win these trades and press the button and execute, as I always say, it is also very and vitally important that you avoid losing trades that are unnecessary. In this scenario, if you saw the but bodies, the bearish close, I would understand why you would want to sell it. But ignoring the microstructure and the fact that price is within a cluster with no directional bias and not allowing price to attempt to get to the high first and completely fail would be the reason why you continue to lose these trades. Very simple, very powerful. And all we're doing is trading a single candle, but just adding the correct story to the process. If you enjoyed this video, guys, hit the like button, subscribe, turn on notifications, and as I always say, continue to trust the process.